No, I'm not playing. Cause it's like we can definitely cut it up into different pieces.
We could have edited it out for real.
Yeah, no, we can. But
We can get better at that.
what is the importance of investing? Good evening, everybody. My name is Jordan Brooks with BTO Investments and Consulting.
My name is Cornell Allen, BTO Investment Consulting.
And my name is, apologies. And my name is Nahu Dimitri. I am the founder of BlackMetal Finance.
Did you want to redo that? We can just edit this out. Did you want to redo that?
Yeah.
All right. Good evening, everybody. My name is Jordan Brooks with BTO Investments and Consulting.
My name is Cornell Allen with BTO Investment Consulting.
My name is Nahu Dimitri, founder of BlackMetal Finance.
And this is our Road to Financial Freedom series. Just to give you a little bit of background of myself, I've been investing in the stock market for about 5 years now, and the returns that it's given me is exponential. And I'd be a fool not to educate my culture and allow them to help grow wealth with me. And which is why we have created this series to, take beginners, individuals that already have been investing and want to learn more on the road to financial freedom. And in this episode, pretty much we'll be talking about, the importance of investing. We'll go over a little bit about what the stock market is, what the cryptocurrency market is, how does one get started in stocks, and also how does mindset help with investing, because not too many individuals that are in this space talk about that. And is there anything that you had to add, Cornell or Nahu?
No, that's a good general basics overview of the episode we're trying to go for today. And I would say the last point you made, mindset, is one of the most important presets that we would need for investing, because without the knowledge to execute, can't do it for you. It's just like the old saying says, lead the horse to water, but you can't force it to drink.
Right.
It's been many times where somebody's told us something good to do, we didn't listen, and it turned out to be more beneficial in the end.
Absolutely. And I mean, that's the same with investing. Like, for example, the importance of investing. Like, that's, as I said, that's the topic of this video. So just sit back and relax and enjoy. So pretty much from my perspective, investing is very important because it not only does it set you and your family up for the future, it also sets up other future generations from your family. And that all comes from making smart investments. As I stated, you have the stock market that you can invest in, the cryptocurrency market, and this is never too late. It's never too late to start. As long as you start, that's the most important part. And what would you have to say about that, Nahu?
A 1,000-mile journey begins with the first step. You're never too late. If you think you've missed the boat, you probably haven't. So don't let fear get in the way of your potential gains. Yesterday was the best day. Today is the second best day. That's the advice I give to people when they want to begin investing. But for me, I had begun investing in cryptocurrency a couple years back, maybe about 8 years now at this point. So 2013, 2014. Funny enough, I actually found out about crypto before the stock market. Nevertheless, it's all still the same, where you're trying to figure out a way to, how should I put this? Have a nest for yourself, right? So you want to have multiple goals. You don't want to work your whole life, right? People always say, oh, you want to retire, work X amount of years, but that theory just doesn't work anymore in this society, given what inflation, a whole set of factors, prices increasing, wages haven't increased. You're just going to have to find another way to generate income. You only have a set amount of time, set amount of energy. So what are some ways that you can do? Put it in assets. And so that's what I started doing now. And I think that's what, BTO and BMF are trying to promote now for the culture. Just let people know, investing is another route that you can take.
Yeah, that absolutely. And just give you a brief background of what the stock market is. Stock market consists of 3 leading exchanges. You have the New York Stock Exchange, the NASDAQ and the Chicago Board's options exchange. And obviously, these exchanges have different companies listed on there. And just a little fun fact, pretty much the New York Stock Exchange, that is the largest stock market exchange in the world based off of market cap, estimated to be worth 28.5 trillion as of June 30th, 2018. So just hearing those metrics right there, that just lets you know how much money is being moved around. And if you invest in any of those companies that are a part of this exchange, you are contributing to that growth, and as well, and you are also able to, get a return from investing in those companies. And obviously, there's different requirements for each of these exchanges. If a company would like to be listed, talking about let's start with the largest stock exchange, the New York Stock Exchange. And pretty much, if companies would like to be listed on that exchange, obviously they would need at least 400 shareholders that own 100 shares of stock. And the market value of that company must be at least $40 million. So just off of me hearing that, I wouldn't mind investing in a company with a value like that, because obviously they must be doing they must be doing something right, because in order for you to get to that, in order for a company to even get to that market cap, individuals have to believe in it, because they can't just get there themselves. They need investors, they need customers that buy their products and things of that nature. And, that is what will allow them to, grow their business. But that was a little side note. I just wanted to go ahead and get that fun fact out there, that the New York Stock Exchange is the largest stock market exchange out there. And there's great companies that can obviously lead you to financial freedom.
Agreed. When someone comes and approaches me and they ask, hey, how can I start investing? I typically ask them, the first question is, do you want to be an active investor or a passive investor? Active being somebody that has, a fair amount of time or interest to pay attention to the stock market, be that daily, hourly, weekly, monthly, and still, the jargons of the market, that the gyrations, right? The 5% randomly that occurs. If that doesn't scare you, then active is probably your best route. But typically most people, the everyday folks, who work the 9 to 5s and whatnot, they're just too busy, family, whatnot. I usually suggest that they be a passive investor. So when you're a passive investor, what do? You simply, once you get your paycheck or whenever you get your pay stubs and whatnot, you just put a little bit away into a passive account, be that a passive ETF, which is an electronically traded fund, or an index fund. So what is an index fund? It's a basket, or you can say it's like a fund that contains more than one stock, typically in the ranges from, a dozen to even 200. Now, you did list off the different stock exchanges. I will also list different types of the largest ETFs that are traded right now, or the different markets rather. So again, we said the NASDAQ, which is technology stocks and biotechnology stocks, the Apples, the Microsoft, the Teslas of the world, even some of the smaller ones, or not smaller, but the more name brand ones. So, Cash App, which is run by Square, PayPal, Chegg, even for those students right now that use that app, and a whole cohort of others. The Dow, which is, I call this for my bio friends out here, the mitochondria of the stock market, the powerhouse, the manufacturing hubs, the things that create things. So that would be Home Depot, Boeing, Walgreens, and 2 tech companies that are actually in the Dow Jones, Apple and Microsoft, right? They produce a lot of electronic hardware as well. And then the third one is going to be, this is the biggest one, the S&P 500, Standard & Poor's. So this one simply tracks the 500 largest publicly traded companies in the United States. Typically, no money manager out there has managed to outlast the S&P 500 for more than 25 years. So your best bet as a passive investor is going to be just simply dollar cost averaging your position into the S&P 500, or SPY, which is the largest traded ETF.
Quick question now, what is dollar cost averaging for those that don't know?
So dollar cost averaging is, not putting all your money in at once, right? So you have, let's say, $1,000, right? I'm not going to tell you, or rather, you're just not going to go ahead and just put $1,000 today, right here, right now. No, you're going to weigh every week or so. If it goes up 5%, you add. If it goes down 5%, you add. And eventually, you're just going to keep on averaging out. So that's why it's really high and the market somehow drops 5%, you'll still have a little bit of cash on the side to go ahead and lower that average price that you bought in bringing yourself down.
Beautiful explanation. Is there anything that you would like to introduce individuals about the crypto market?
Yeah, I was going to relay on something Black Metal had mentioned about going into the person's ideology if they're going to be a passive or active investor. That goes great because active and passive really is a big difference for what the people need to consider when they first start. And one of the newer and nicer ways I like to passively invest, even though I'm an active investor as well, is in the newer vehicle market that we call cryptocurrency that is only about 10 years old now. Bitcoin is the originator, progenitor, and the number one highest ranking coin with the largest market cap in the space. It was created by Satoshi Nakamoto. That's an alias name. That's a little fun fact. Nobody knows exactly who he is, but it was created to be digital currency. It has store of value, and then many other coins have been sourced and forked over that code, and then more things have been implemented onto the code to make these coins have value. And since the space is so new, I give like an example to people. Why not get into the stock market in 1870?
Exactly.
It's a no-brainer. I would definitely like to do that. And with crypto, you can get high APYs with stable coins. Stable coin being a pegged 1-to-1 ratio. For one coin equals $1. Not like the example I gave earlier for Bitcoin. Bitcoin can fluctuate from, we've seen it as high as 60,000. We've seen it as low as 7,000 within the span of just 1 year. Good rate, if I would say, if I got on 7,000 position thing as well. But with staking, this is kind of like a passive income vehicle where you can get maybe 25% on the asset that you choose to stake, to where you can have your money come even faster.
Right. No, I agree. And to add on that discussion of the active versus passive investing, I do both myself, but I always encourage individuals to have more than one trading account. So that is where that can really benefit you. So you can have one account where you can actively invest and another account that you can passively invest. And I currently do that now. So the account that I actively invest on, obviously I'm going to be trading on that. These are going to be, the options calls. I may buy some shares here and there, but this is basically to, strengthen my trading skills, my technical analysis, because there's opportunities in the market always. And, I would hate to sell somebody short and keep them, thinking one way when there's plenty of avenues and plenty of possibilities to create wealth. And so as I said, back to creating those two accounts. Passive investing obviously is much more safer and less riskier, excuse me. And what Nahu was saying about the dollar cost averaging, that's probably the best blueprint that you can use if you are trying to grow wealth for the future. And key word future, that means long term. I'm thinking long term when I think of future. And they
tend to forget is these companies pay you money. They pay you a dividend. And so if folks don't know what a dividend is, it's pretty much the quarterly profit that a company makes. They will pay you out a percentage of that every quarter. It all depends, but most stocks will do quarterly, some do semi-annual, or even just an annual dividend. But again, yes.
Some even do the monthly.
Exactly. Those are REITs, real estate investment trusts. Again, another way, depending on how you want to be an investor or what type of investing do you want to do. They don't call compound interest the eighth wonder of the world for no reason. Right? But you can buy one share of Apple, right? I believe their dividend or their their dividend rate is 2%. So that means if the price right now is $150, 2% of that, you will get that annually in dividend just by leaving it. And then you can compound that. So instead of having one share at the end of the year, you'll probably have 1.05. But by leaving that for 5 to 10 years, it'll begin to accrue without you doing anything. And that's the power of passive investing in dividends.
Yes. I couldn't have explained that better.
Step back over to cryptocurrencies real quick, because I want people to understand why it was made. because this is why I had got into cryptocurrencies actually first before the stock market. You need to look back around 2009 when Satoshi Nakamoto created Bitcoin. What happened then? We had the stock market crash. Why did we have the stock market crash? Because Wall Street was misbehaving. They got a slap on the wrist by the government, and they got another bailout. Doesn't matter if it was a Democrat or Republican, they both paid out Wall Street. So what did this Soto person do? They created a system where you can only create 21 million total Bitcoin that cannot be influenced by one single person nor a single government. Essentially, it's a non-fiat currency, right? Fiat currencies mean, or fiat currencies,
valueless.
They're backed by a central government. However, these central governments have run amok and have just, gone reckless, I should say, with their printing power. And so that's why you see your US dollar basically go from being worth something maybe 10, 15, 20 years ago to being worth nothing now. I'm sure an anecdotal experience would be, we used to have the dollar menu, right? The dollar menu. Our currency is not worth as much.
I remember when I was younger, man, you could get get 4 things from the corner store for $1. Because our dollar used to be backed by gold. Well, not even back then, but Nixon did that a little while ago. But the fiat currency isn't it, because it used to be backed by gold. Now we don't operate on that real standard. So where's the true value? The value goes into the finite amount of the thing that we're invested in, aka Bitcoin or cryptocurrency, where we're going to put the store of values. And even like another one, we could say the number 2 space, Ether. If you're getting in the crypto space, you're bound to learn about Ethereum. It's basically the building block layers that everybody has to first go through to really be interoperable in the space for right now, currently 2021. But there are other people working towards that to try to steal their market share to gain more. And then being knowledgeable about those can help you gain some gains as well.
Absolutely. So in the early times of cryptocurrency, right? And just to give people perspective, when Bitcoin first came out around 2010, late 2009, the market cap was around $1.8 million. The next year that jumped up to 1 billion, and now the market cap is hovering around $2 trillion within 11 years. It's absolutely insane. But to get to your Ethereum point, blockchain, Bitcoin was not what it was. It was not as simplistic as it was right now until around 2013, 2014, when you had the Bitcoin committee. They met up and they wanted to go 2 different routes, right? Some wanted to argue they wanted to make Bitcoin essentially e-gold, right? Just a storage of value online. Whereas some wanted to make it the currency of computers. And so that's where we had a hard fork split where essentially the e-gold people won out. And so that's kind of the trajectory Bitcoin has gone ever since 2013, 2014, where it's sort of like a storage of value. The blockchain is very pure. There isn't really much you can do with it. Nevertheless, you've seen its value rise. And from the other side, the computational aspect where you can do more functionality with things has become Ether or Ethereum, like you just stated. Now Ethereum being the currency of computers or currency of the internet, so to speak, you've seen another economy evolve out of it. And what is that? We've seen, in fact, over the last year, non-fungible tokens, right? So they don't pay with US dollar, they don't pay with Ethereum. Now, of course, the system comes with its own set of drawbacks. We can discuss that later. But again, to answer your point, Bitcoin and Ethereum are now the 2 main ones in the space. And to give people a perspective, Bitcoin right now, when people tell me it's a scam, if it's a scam, then why is the market cap $1 trillion and Ethereum?
Why are there millionaires and billionaires invested into it? I don't think they would.
And how did it go from a 1 million market cap to 2 trillion?
Exactly. Think about it. Bitcoin is the greatest investment of all time. It came out at around 0.01 cents, and now it is worth today $45,000 in 11 years. The greatest investment.
Astronomical life-changing gain.
Now, of course, most people back then, myself included, you think it's a scammer. You didn't think the price was going to go this high unless you have the knowledge of what we're talking about with inflation, with fiat currencies, not being attached to the gold standard. So these are things, if you're choosing to become an active investor, you need to make yourself aware of these things. So in case you see another opportunity, you don't miss it.
Right. Do some research so you can be up and up so you don't miss out. Because there's a story in crypto where they call this guy it depends on the current price of Bitcoin, but it's hovering around the $150 million pizza story. The guy didn't believe in his Bitcoin. He had about 20 20 plus thousand Bitcoin. At the time, it was only worth enough to buy him a pizza. He paid said pizza delivery company all of his Bitcoin, which turned out to be over $150 million.
But it's stories like that that sort of generate the legacy, or like the myth of Bitcoin, the aura.
Mm-hmm.
Those are things, like again, it's bigger as it goes down.
Right. And although this is a very lucrative investment, you must make sure that you're securing your accounts, and because you can
do your due diligence.
Right.
It comes with its own set of headaches with these digital assets, so to speak, right? If you lose your password key for your Bitcoin wallet, it's gone.
Your money's gone.
You have nothing at that point.
Can't access it.
You can send it to the wrong address. One simple error, misletter, caps lock on, you can, send it to the wrong address and your Bitcoin is lost forever.
Mm-hmm.
Even though 21 million Bitcoin were made, there's only around 18 million available. 3 million have been lost for whatever reason. And we only have around 6 million total circulating right now in exchanges at this point.
Is it good currently? What you call it? My bad, I wasn't trying to cut you off, but just to add on to that figure point, only about 5% of Bitcoin is owned by corporations right now. So some people have seen all the news that Michael Saylor and all them were buying it up. Think it's not going to be any left. The big money is not in charge just yet. They're trying really hard to where they can possibly manipulate the price because they have more money to do it. They can do that on the stock market side as well. But they're trying to buy it cheap from you for when you sell it, because 95% is allocated to the public.
And that's a good point that you bring up. And that's something that individuals will learn throughout this series as well, while buying low and selling high. So for example, if you're going to your favorite clothing store, you're more likely to want to buy your favorite clothing item on sale than for its retail price. So why wouldn't you do that in the stock market? Individuals tend to always get scared and always allow fear to dictate their decisions, and they're missing out on big profits. And which will lead me into the next topic is mindset. And mindset is very important when it comes to investing, because there's billions and trillions of dollars being traded on these markets every day. We don't do Forex, but that's probably where the trillions comes from. But the billions of dollars are circulating throughout the stock market and cryptocurrency every day. And there's going to be days when, the market is doing bad, such as there's going to be days where you're having a bad day in general. And it's very important that you stay focused on the goal. The goal is to generate wealth. That is the name of this series, is The Road to Financial Freedom. You don't get to financial freedom overnight. You don't get to it in a year. You don't get to it in 2 years. I mean, it's different for everybody, but the type of financial freedom that I'm talking about, I probably won't even be able to, my future generations will, but it's not even about me. It's about, setting up, as I said, for the future, the legacy. And which is why it's very important to, whenever you see, stocks or your favorite stocks not doing so well, it's very important to invest into them after, obviously, you've done your proper analysis and due diligence, and you've assessed the whole economic conditions. Because just because a stock drops and reaches a certain price that seems on sale to you, doesn't mean that's the bottom. And you'll hear that term a lot as well. But and pretty much, everybody, there's millions of people investing in the market, and everybody has a different risk tolerance. So, for example, let's say you see a price, or the market is, has dropped. Let's say your favorite stock dropped about 5%, and the current market is going through a correction. It's very important that you be patient, and setting limits is also important as well. But it's very important to be patient, because there might be other individuals that might not be able to tolerate this drop, which leads to a further drop. And that just goes to show that patience is key. And that's something that you have to, understand mentally, that being patient and going with the flow is,
Absolutely.
that's one of the key ways to be
You know,
successful in the stock market.
if I had $1 for every time someone told me the market is crashing, you should get out, sell, sell, sell. You know, you're all multimillionaires at this
Rich
point.
already.
Mm-hmm.
At this point in time, you know, you can look at any chart of any U.S. Indice, right? It can be the S&P 500, Dow Jones, NASDAQ, what have you. They've all continued to rally. You buy the dips, let it rip. That's the saying. That's for passive investing. For the active folks out there, I tell them, if you haven't had a red day, then you're not a true trader. We've all been there. We've all done that. Develop your own strategies to, I guess, in a sense, mitigate the mental mistakes you made, right? So if you saw a bad pattern, write it down and say what you did wrong. Biggest thing I can say as well for my active folks is don't trade in anger. That is how you will burn your account. That is how you will lose money, by saying, oh, I can make it back again today. I'm down X%. I'll make a certain amount back if I just do this quick trade. And you'll probably end up
Don't they call that like revenge
not
trade?
in the correct mental mindset. So that's for my active folks. And again, for my passive folks, if you feel the need to cash out after seeing a 5% drop, then you may have invested too much all at once. So maybe take your foot off the accelerator a little bit and maybe just start adding a little bit less if you're that concerned. Or another thing too, I tell people is you are who you associate with. If your friends are also investors as well, get their opinions as well and see, what are their takes on the market, and sort of ease your concerns with these, simple drops.
Very true.
Fluctuations are natural in the market. And in fact, they're critical for the market. If the market doesn't drop an X% within a certain time frame, it tells you you're overbought and the drop is going to be harder than you
Even worse.
Mm-hmm. Very true. Very true. So, obviously, individuals probably wondering, how do you get into the stock market or cryptocurrency market? Sure. First things first, you need a bank account. Okay. Yeah. Because all of these stockbrokers require you to link your bank account, obviously, to verify that you're a real person. And obviously, you need to have the sufficient amount of funds that you're trying to invest, unless you'll be, trading on margin, which I don't do. But if you do your due diligence, right? If you do your due diligence, it can serve to be very helpful and lucrative for you. But yes, you need a bank account. Make sure that that's linked to your stockbroker, and basically your stockbroker, that is what allows you to buy and sell different companies. And there's a variety of stockbrokers, and obviously everybody has their own favorites based on their financial situation. There's some stockbrokers that charge fees, commission fees per trade. So, for example, each time you want to buy a company, they'll charge you a commission for that. So, which is why it's important to develop a strategy and consider, the dollar cost averaging method, because you don't want to be, those fees accumulate. And if you're just buying one share in a company, you're better off just waiting to getting a lump sum and just dropping that into a company, as opposed to just buying one share. And this is pertaining to those stockbrokers that have fees, and those are your TD Ameritrade, Fidelities, or
Actually, I got a correction on that.
Okay.
Maybe certain assets, but that's the one good thing I will give Robinhood, even though I do not use their platform.
Right.
Feeless trading.
They were the first one, that went feeless
They were
trading.
the first.
They actually brought the market that way. Schwab, Fidelity, E-Trade, TD Ameritrade, they all dropped their fees for most stocks, right? So like McDonald's of the world, they dropped them 2019ish, just before COVID. As a result, because of Robinhood. They saw that the millennials, the newer generations, were rushing over to them, and so that's what caused them to sort of get with the times, so to speak.
Wow, no, I didn't know that.
Yeah. Well, to further add to your point too, even before that, with the bank account, make sure you have emergency savings. You do not want to have your bank account at $0 and all your money in a stock tied up. That's not how it works, because then you're going to make some bad mistakes where you're like, okay, I can take out X amount of dollars from my portfolio, given how the stock is doing, put it back into cash, or have some money. No, have some emergency funds some fun money as well, and so that you can let this money grow without having those sort of headaches come to be. I have no problem with Robinhood. In fact, I first started trading using Robinhood just as the ease of function with it. You know how quickly on the phone.
Very user friendly.
Very
My serious folks
the
who really
easiest.
want to develop wealth, any of the other brokerages are better for the primary reason of having customer service, right? You have customer service. And in fact, you can also have, you can open up a checkings account with those companies, right? Schwab provides checking, Fidelity does, E-Trade as well, where you can, get better yields rate on those checkings accounts. I mean, it's not great, right? Compared to the APYs we were discussing with dividends and Coinbase staking, or crypto staking rather. But 0.2% on a Schwab checking account, 0.2 is better than a 0.002 in a regular bank account with Bank of America or BB&T.
Chasing the highest numbers.
Absolutely. So, when folks ask me with crypto, for example, I tell them, just get with your Coinbase, your Voyagers of the world, ones, again, that we said, not only provide money just for leaving it in USD, but give you money just for leaving it in Bitcoin, Ethereum. If you just want to actively buy this stuff, dollar cost average, like we discussed earlier, use your Coinbase, use your Voyagers of the world. Again, they give access to some of the more popular cryptocurrencies out there, ones that have around $1 billion market cap, meaning that there's a lot of big money behind them. It's not just you. And for my active folks who want to, begin trading a lot, open one up with Binance or KuCoin. These accounts give you access to the entire cryptocurrency market, ones that are, a lot of them are going to be scams. So trade at your own risk, of course. But again, if you want to play the game, those are the apps to use with respect to active trading in cryptocurrencies. And again,
And like we mentioned earlier, in the crypto space, you want to be very careful and take notice to all the passwords that you save and key codes, because security is paramount. This is all digital technology, is very new. So they'll probably give you 4 different backup phrases or methods to verify that this is your account. And if you lose those, you will not have access to the said account. It's gone. You can have a regular password that could be connected to your email. You could have, usually it's a 12-word phrase that they want you to write in a certain order. I would recommend writing that down on a piece of paper, not in a cell phone that can also be lost. Put it in a secure envelope, safe, or whatever, and then stash that away, because we're trying to invest for the long term. They'll give you a secondary login verification method like Google Authenticator, where you'll have to open that app, and then that app has a time-sensitive code that will need to be put into the app for you to be logged in. So those are about a few methods that majority of the crypto space uses. And like we mentioned earlier with the fees, you don't want to just have your money go away, not eating away from your profit, kind of from spending on
trading, speculative trading.
Yeah, because in the crypto space, when you buy on Ether, you're buying through that blockchain, and you want to make sure that the fees aren't high for that day, because it depends on the computational space that's associated with whatever traffic that's currently going through that ecosystem. Like for Ether example, it's number 2. So with the rise of NFTs, the market has pushed the GWI, or what they call GWI fee, through the roof. Kind of lowest fee I've seen about $70 right now. Only makes sense if your transaction over about 1,000. And this comes into where you would need to know more about the space in general, because there are other chains that you can get the same method done, but for a tenth of the price. Like for example, Solana. It's new, it's high up on there, and it's been moving just for that reason as well, trying to solve some of the trifecta aspects: security, scalability, and just speed.
I know this is really new to a lot of people, especially to folks who have, where they're not even into investing. But remember, this arduous process is for your protection. It's for your security, because there are a lot of scammers out there, a lot of fraudsters that want your money, right? So again, just make sure, again, like you said, take those passwords, write them down, take multiple screenshots, do whatever you have to do, and invest properly with cryptocurrencies.
No, I agree. So I'm curious. So you kind of hit on some of your favorite, cryptos. what would you all say are some of your favorite stocks to invest in? Obviously, I'm gonna have to say Microsoft. Like that was the
Apple.
first stock that I invested. Yeah, Microsoft and Apple. But Microsoft was the first stock that I invested in the stock market at like $70. This was back in like 2017, and I didn't. This back when I started, I didn't really know too much. I just knew that there was this vehicle that allowed me to make money as long as I, if I have the sufficient amount of funds to put into a company, obviously if it's a great company over time, it will prove to be a good investment. And in that case, Microsoft was definitely one of those good investments. As I said, I invested at around $70. It's trading about around 294, 295 with the all-time high of around 305. So that just really just goes to show how lucrative the stock market can be. Like just seeing how passive invest exactly, just seeing how much increase in price that it's had over the past 4 years is insane to me. And I feel as though Microsoft could possibly be higher, but that's just
calculated market cap around $2 trillion. So, and I'll take that point too. That's why when I first started trading stocks around 2016, mid 2016 was, look, my greatest asset at that point when I was early 20s was time. Right, that is your greatest asset, especially in the investing game. And so I said to myself, I should probably look for mid-cap stocks. So what are mid-cap stocks? Mid-cap stocks are companies that have a total market cap ranging anywhere from around 2 billion to 10 billion US dollars. Now, quickly, market cap is the stock price times the total amount of shares available. You can do that on the side for folks who want to know that. So what are some companies that I looked at? Well, the way I looked at it was, what penetrates my bubble as a consumer? What do I use every day that penetrates my bubble? For example, I'm using a MacBook right now. That's an Apple. What's my service on my phone? Verizon. When I travel, what planes do I use? Typically Boeing, sometimes Airbus, which is European. But some apps back then that I had been using were Cash App and PayPal. And then again, like we said earlier, what's run by Cash App? Square. So I think I got in that one at around $11 back then in 2016. So, I mean, I sold it sadly. Yeah,
that goes to show that your positioning was amazing on that position.
Yeah,
got in early.
Talk about that. Yeah, position.
Then. So that one, I remember PayPal was a bit too expensive for me at the time, so I was like, I'll take the $11 Cash App share. Another one was Chegg. Right, I had used Chegg when I was in college.
Me
so
too.
I found that the stock was around $4 a share. I said, heck, why not? The one I do regret was Tesla. Just again, you know why? Because I read too many bearish news, too much bearish sentiment on it. I did not do my own due diligence, and I missed out on a great opportunity. Another one, Roku. So again, it all comes down to, since we're younger, our time horizon is much greater. So I went for mid-cap stocks that truly have the potential to 10x, right? It's easier for a company to go from $5 billion market cap to 50 versus one going from 50 to 500. And then again, from 500 to 5 trillion, which is why I kind of steered away from the Microsofts and the Apples of the world.
Right.
Nevertheless, if you want to be a bit more passive and you want safe money, it doesn't get any safer than Apple or Microsoft at this point. So I don't fault anybody for investing in those. People have done fantastic in those names as well. I just decided to go a different route.
Right.
So that's how I started. And that's the way I look at it in mid-cap stocks. Sometimes I look for small caps. Another technique I like to do is look at companies that have just entered an index. So I know we talked about the three major ones, but there's also another one, the Russell 2000 or the Russell 1500.
Yeah.
This is small cap stocks. So stocks anywhere from around 500 million to $1 billion market cap. Now those are, go big or go home type of thing, where they can, or rather feast or famine, where they can explode, right? Make its way up from, the Russell to the NASDAQ, or they can just die out because the company just failed. So, it just depends on your risk tolerance and just how knowledgeable and how deep you want to go down this rabbit hole.
No, very well said, bro.
It can be said for cryptocurrencies as well, I might add. If you want to just do the traditional, sure and steady wins the race, Bitcoin, Ethereum, sure. I don't like.
If you want to make some money, you want to look at the lower ranked coins, which you can usually look on a coin market cap, which is one of the best resource tools I like to use. CoinMarketCap lists all the coins, or including their all-time high price, all-time low, when they were first introduced to the market, their how many coins they have, the fully diluted market cap, and then current supply, letting you get a good gauge on what you should invest in. Because if you see
I
a
want to
coin,
emphasize that point again too with the total coins circulating, right? There are so many people that, oh, Dogecoin to $10.
Hmm.
50 billion Dogecoin available. So, it's not about the price, total coins circulating. And again, for stocks too, how many stocks are available? Apple, the reason why it's so cheap is because they have over 5 billion shares, but that's why Amazon is so expensive, right? Amazon only has 100 million shares, right? Versus Apple's 4 billion, even though their market caps are around the same. So when people tell me, Amazon's more expensive than Apple, I'm like, no, not really. It just all depends on how you look at it.
total.
Right.
And they have their pros and cons, right? Because if the stock price is cheaper, then it allows, folks who are just getting into the game, it makes it more digestible to purchase the stock. It's very hard for someone to take out of their pocket 3,000 and some change to purchase one share of Amazon.
Right.
But at the same time, there's less price fluctuations from, retail investors and whatnot, because, it's just such a heavy price. It takes a lot of money to move that name.
Very true. Good point. Very good.
But that is a good point, from seeing that you have to take notice of what the real gains that can be made, because if it already has a huge market cap, it's already, what is it, like, for example, Dodge, 6 trillion plus coins.
Something like that.
If you were to divide the market cap by how the current price, you could do the math and see how much more money you would need.
Market cap right now. Absolutely ridiculous. But
I think it went up a little.
I was an early investor in Dogecoin.
Elon tweeted that picture of the dog, so it went up like 5-10% just today.
Yeah. When I first purchased Dogecoin, fun fact, I purchased it maybe like 2 weeks after it went, ICO'd in 2013 as a complete joke. Just because
it was free during
the Jamaican bobsled team. They were trying to generate revenue so that they could go, for the bobsledding team in the Winter Olympics, I think.
What?
Like that. Yeah, that's how it came about. So I was like, hey, let me just throw $20 and, show my support. The founder, he even sold his Dogecoin because he made it as a joke. But what has happened, and I think this is the power again of cryptocurrencies, because it's not controlled by the government, it's controlled by the people. If the people want to give it value, then it will get value. And not to mention, the biggest difference between Doge and a lot of other coins outside of Bitcoin and Ethereum is that they have big money players behind them that have platforms of their own, businesses of their own, where you can use Dogecoin. So for example, Elon Musk, of course, he runs SpaceX and Tesla, where he's, fooled around and said, perhaps we can use Dogecoin, so on and so forth. But also Mark Cuban owns the Mavericks. So, you could easily go in there and use Dogecoin to pay for your food and beverage. So there are real world, applications of this. So I laugh and we joke about it, but do not sleep on the power of us.
They try to give it some utility. And that is the power of crypto in general, that because it's a program, you can upgrade the program and then give it more utility one day to where you would be up on the market, staying up on the news. That's more on the active side, though.
Yeah, and we can even discuss, like, this can be for another topic, but keep in mind too, with respect to Dogecoin, I think more than 50% of all the total Dogecoins are located in 10 wallets. So even though people right now, we're screaming out, decentralized, everyone has it, not really. So if one or two big whales decide to dump, the price could tank. So just keep that in mind whenever you're looking at things. So
that's one of the good benefits of having a public blockchain that we have now. You can follow the money a lot easier, making it harder to do what they did earlier with GME and AMC in the stock market. Like you were saying, it's the power to the people. We're the real market movers, not them.
Not really. No, exactly. I mean, how do companies make money? We invest in them.
Yeah,
it's like right. And it's like, obviously the more money you have, the more power you have to move that stock. But which is why you should follow the whales. And that is something else that we'll get into. But that is something that I like to do, is kind of see what are the billionaires and the millionaires investing in, because obviously I'm trying to become a millionaire and a billionaire, and do my due diligence in the companies that they're investing in, because they wouldn't be investing in it for no reason. I mean, how do you get to that amount of wealth through investing in companies that aren't good? That doesn't make sense.
Right.
So yeah, following the whales and obviously doing your own due diligence is something else that I like to implement in my own strategy as well. But yeah, we're hitting that 8 o'clock mark. I didn't get any messages from Zoom or anything, but no, this was so far so good. Yeah, so far so good. I know we've had Zoom sessions before, but actually hosting a show is kind of yeah, it's much different. Yeah, great experience, and I kind of want to. I think I might want to do this weekly because I need this practice. Yeah. I definitely need
More
this.
content, the merrier, frankly.
No, exactly.
More
And,
content, the merrier.
right.
Iron sharpens iron, like they say.
Right. Um, yeah, so this was kind of a bit all over the place, I know. But
It's an
yeah.
introductory to both spaces.
It's a lot of
I
knowledge.
really want, especially Black folks, to get into cryptocurrencies before it gets taken over by the big money on Wall Street, the traditional folks that are in the finance.
It's so new. We have to take advantage of it.
I'm gonna edit all this out. We're just
Yeah.
right now. I actually want to go over this whole series, and obviously you have a wealth of knowledge now. I'm gonna just go ahead. I mean, we do as well, but I can tell just based off of your speaking, and yeah. So obviously, I can't with the series name and what's that?
You guys too, man. No.
Yeah. Appreciate it. Yeah. So yeah. So how would you like to go about this series? Like, it's this road to financial.
We can bring in random folks if they have questions. You can, on BTO's Instagram, ask folks what are some questions that you guys have regarding cryptocurrencies, and we can discuss history of the market, history of crypto, projections going forward. Again, how to start. Sorry, let me just start sending out some.
Hey, Nahu, do you have any local people in your Discord, like around you, that you would like are in contact with?
Yeah.
It'd be a good idea to like eventually, because you were more established than us with longer results, so you could you would do an interview with your person as well, saying, hey, this is one of the guys who maybe first started with my Discord, and we have results, and it's showing here what he's learned from being a novice. And then since we're still a little new, we can bring in a novice ourselves and then show them,
their results.
Yeah, I can bring in one of my either a moderator or someone that has been with me from the beginning.
Okay, cool. Yeah,
different perspectives is all gonna help everybody.
Right. No, I'm definitely trying to, because you were the one that mentioned doing this, a weekly thing or 2 weekly thing. So what do you think would make most sense? Should this be an every week thing or every 2 weeks?
Yeah, it can be I think weekly is pretty good. I think weekly could be solid. Maybe bring it down to 30 minutes or so, but yeah.
Yeah. Okay.
30-minute, just, flow conversation. Like you said, we were a bit all over today, but stocks on the other. But I mean, if you're passionate,
yeah,
viewers will appreciate that.
Right.
They appreciate the genuine passion, the authentic passion that we have for it.
That's a fact.
Big part, sense there.
And yeah, because the main purpose of doing this series is to, just gain more exposure, marketing. And, it doesn't have to be a certain way. But like you said, we can do 30 minutes, one session, one episode can just be strictly related to stocks. And then that's, a clip right there. We can edit that out and then obviously take the best parts or even throw the whole interview on the YouTube, whatever we feel like doing. But we should definitely condense it a little bit just so we can get comfortable with
it's a small base.
Just so we can get comfortable with just speaking and not overthinking. And I don't even think necessarily I was overthinking. I just was, how you get writer's block? I had speaker's block.
Yeah.
I was like, hold up.
It's becoming more natural, you know what I mean? Yeah. Genuine conversation. It gets
right.
Some stage.
Like now that I know that this will be edited and not a part of it, I don't know why my orientation is way easier.
Yeah.
It's like I don't feel like, all right, I gotta be perfect right now, so it's not I'm being recorded.
Right.
I just really want people to I'm really, like I said, I'm really passionate about people getting back in.
I want people to invest bad.
I posted on my personal Instagram, the greatest mistake of my life by far and away was getting out of cryptos back in like 2015, 2016.
Yeah, when you
I really want people to learn from my mistake, and I think this what we're doing right now is a great avenue for me to
right,
because it just shows them like a lot of us could have been rich already, really.
Right.
And we just picked the right asset for the one time.
It's not
and
too
believe
late.
in it.
No,
Yeah, it's not too late. But I just ain't not ready.
If we didn't sell.
That too. But just even starting, like, because my sister messed around and knew about Bitcoin when it first came out, but she never bought none of it because she didn't know how. But if she like dived into it, like, hey,